Hello, and welcome back to the Dinar Daily, your go-to source for real, reliable, and timely updates on the Iraqi dinar and what's really happening behind the scenes. If you've been holding IQD and wondering whether that long-discussed revaluation is finally around the corner, then you're in exactly the right place. Today's headline says it all. Iraqi dinar live rate alert. Experts warn major currency move ahead. So stay tuned, because we're diving deep into the latest signals, expert insights, and what you should be watching right now. As we move through 2025, speculation around the Iraqi dinar has reached new intensity. Many holders are asking, is the long-awaited revaluation era truly beginning, or are we still in a holding pattern? By the end of this video, you'll have a clearer picture of where things stand and what steps you might want to consider next. We'll unpack macroeconomic trends, policy moves, and real market behavior shaping the dinar's trajectory right now. Let's start with the facts on the ground. At this point, the Central Bank of Iraq has not announced any official revaluation of the Iraqi dinar. The exchange rate remains relatively steady in the formal banking system, moving only slightly in response to inflation pressures, oil revenues, and global monetary trends. However, beneath that surface calm, activity is building, especially in informal trading markets, where speculators and local traders are reacting to whispers of new policy shifts. In short, no confirmed revaluation yet, but definite signs of motion. It's important to remember that a revaluation doesn't always mean an overnight dramatic leap. Often, it begins subtly, with smaller spreads between official and parallel rates, quiet adjustments in central bank policy, and strengthening over time. These early signs can take months or even years to unfold, but when they do, they set the stage for lasting change. The question now is, are those early signs here? Let's take a closer look at the foundation of Iraq's economy. Oil. Oil revenue remains the country's lifeline, influencing everything from government budgets to foreign reserve strength. Recent global tensions and OPEC decisions have nudged oil prices upward, giving Iraq a little more fiscal breathing room. Stronger oil income can empower the central bank to defend the dinar's value, stabilize the economy, and potentially prepare for controlled appreciation. However, as always, oil alone doesn't determine currency destiny. Politics, policy, and reform matter just as much. On the monetary side, the Central Bank of Iraq has been gradually tightening its management of liquidity and inflation. Recent moves include foreign reserve interventions, limits on excessive currency printing, and stricter banking oversight. These actions, though understated, are widely seen by analysts as preparatory steps toward a stronger dinar. If we begin seeing the official rate inch closer to the parallel market rate, that could mark the first tangible sign of a soft revaluation. Not a rumor, but a measured policy evolution. Political stability is also a key pillar in this equation. Iraq has faced ongoing shifts in coalitions, leadership debates, and policy uncertainty. However, the government's recent efforts to signal consistency, particularly in fiscal policy and investor outreach, are helping build cautious optimism. If leadership remains steady and reforms stay on track, investor confidence can grow, laying real groundwork for currency appreciation. On the other hand, renewed political turmoil could quickly delay or reverse momentum. Now, let's talk about the parallel market, the pulse of speculation. Across Baghdad, Erbil, Basra, and smaller cities, local traders are already adjusting rates in anticipation of potential policy changes. These informal rates often act as an early indicator of what markets believe might be coming. When the gap between the official and unofficial rates begins to narrow, it's often a signal that confidence in the currency's direction is rising. Still, parallel markets can be volatile, sometimes overreacting to rumors before correcting sharply. Foreign inflows and diaspora activity are also worth watching closely. When more Iraqis abroad begin converting or repatriating funds, that increases demand for the dinar and puts pressure on reserves. Similarly, new foreign investments into Iraq's energy, construction, or technology sectors can strengthen currency support. The more capital that flows into the country, the greater the potential for appreciation or at least exchange rate stability. However, no discussion is complete without addressing risks. Inflation remains one of the biggest threats. If domestic prices continue rising faster than wages, the real value of the dinar can erode, even if its nominal exchange rate looks steady. External shocks, like sudden oil price drops or regional instability, could also challenge progress. And finally, global monetary shifts, particularly if the US dollar strengthens, can limit how far the dinar can move in the short term. Given all that, many analysts now believe a realistic scenario could involve gradual strengthening within the next 12 to 24 months. Not an explosive overnight revaluation, but a phased process. This would likely include smaller official adjustments, tighter spreads, and a series of coordinated policy steps leading to formal confirmation later on. A dramatic jump would risk destabilizing reserves, so gradual appreciation remains the most credible path. For anyone holding IQD, it's vital to watch for specific signals. These include any official statements from the Central Bank of Iraq about narrowing spreads, new interventions in foreign currency markets, major fiscal reforms tied to monetary stability, or visible tightening between official and market exchange rates. Each of these could represent the first domino falling toward a broader currency move. Now let's talk strategy for holders. If you already have IQD, avoid getting caught up in hype or rumor-based predictions. Instead, focus on factual indicators, i.e., economic data, central bank communication, and policy announcements. Maintain flexibility in your plan, and consider staged exchanges rather than all-at-once conversions. This approach helps you adapt as rates evolve without missing potential upside. When the time comes to exchange, preparation matters. First, verify which banks or exchange centers in your region handle exotic currencies like the dinar. Not all do. Make sure your IQD notes are clean, intact, and well documented. Bring valid identification, proof of purchase, and any supporting paperwork that demonstrates legitimate ownership. Transparency will help avoid processing delays or compliance questions. Before committing to any exchange, request full disclosure of the bank's rates, spreads, and fees. Exotic currency exchanges often include markups that vary widely, sometimes several percentage points. Comparing offers between banks can make a meaningful difference, especially for larger holdings. Always prioritize reputable institutions and clear documentation over convenience. You should also expect compliance checks, especially for larger transactions. Many banks will ask for verification of how you obtained your IQD as part of standard anti-money laundering procedures. That's not unique to the dinar, it's a global banking norm. Having your paperwork ready, old receipts, purchase records, or inheritance documents can make the process smoother and faster. Deciding when and how much to exchange is personal. Some prefer to convert everything once rates move favorably, while others stagger exchanges to balance risk and reward. Staging can be smart. It lets you capture value without losing exposure if rates continue to rise later. But remember, holding out too long for a perfect rate can backfire if markets shift. Balance patience with action. For those exploring private exchange options, extreme caution is key. While some licensed dealers may offer better terms, scams are unfortunately common in the exotic currency space. Always verify credentials, check reviews, and never trust anyone promising inside access or guaranteed RV dates. If an offer sounds too good to be true, it almost always is. Tax implications also deserve attention. Keep detailed records of your transactions, when and how you acquired your dinar, the rate at exchange, and any proceeds. Depending on your country's laws, gains from currency appreciation may be taxable. Consulting a qualified tax professional before you exchange could save you from future headaches. So where does that leave us? As of now, Iraq is not yet in a confirmed revaluation period, at least not officially. But growing signals in policy, oil revenue, market dynamics, and trader behavior suggest that the groundwork is forming. The pieces are moving into place, even if quietly. The next 12 to 18 months could prove pivotal for the dinar's direction. The bottom line is simple: stay informed, stay flexible, and stay cautious. The revaluation conversation is heating up, but timing remains uncertain. Smart investors focus on data, not drama. Watch the indicators, track official movements, and be ready to act when verifiable changes occur. Thank you for tuning in to the Dinarr Daily. If you found this update valuable, please like, share, and subscribe to stay ahead of every major dinar development. Drop your thoughts in the comments. We read and reply to as many as we can. Until next time, stay alert, stay informed, and keep your eyes on the rate, because big changes may be closer than you think.